Hello and welcome to the next section. This section is called Fibonacci Retracements. Some people may just call them fibs. So let's get started. So basically, Fibonacci is a tool. Okay, Fib Retracement looks like this, and it helps us get entries and go with the trend, right? Trend continuation. Okay, so this is what it looks like. Okay, now I'm just going to go ahead and pull my settings up. Okay, copy these, take a screenshot. You only really need the ones that are checked. Okay, and they are all right here. Okay. Okay, so leave these up for just a second. Okay, so now that you know what it looks like, okay, let's get our prerequisites, okay, for what we need to be able to use it. So you'll either have a swing high to a swing low, right? Which, if you go back to real market movement, this is what, going down, right? You'd have a downtrend, okay? Or you'd have a swing low. You'll have a swing low to a swing high, okay? And of course, this is going up. You could say that you're in an uptrend, okay? Before you can pull out a Fibonacci, you'll need a retracement, okay? And going back to, structure, okay, if you're in a downtrend, right, it consists of what? Lower lows, lower highs, right? A lower low. If you're in an uptrend, there's your initial low, and you've got a higher high, higher low, higher high, right? That's how it would be. So once you have these, right, and when you fib, right, breaking this down Barney style, whenever you fib, okay, you'll fib in the direction the market is going. Okay, so if you want to try to find a fib level of this, you'll fib high to low, okay? And then you'd look for rejection off of one of these levels, okay, and you would look to short this down, okay? Conversely, right, if you're looking for the market to go up, if you're bullish in a market and you pull out a fib like this, right, you'd fib up, okay? And again, look for rejection, right, and then long this position up, okay? So this is what you would really need, okay? You need a swing, and then retracement, right? A swing, and then retracement. Okay, so that is what you need prior to utilizing the Fibonacci retracement. Now, let me go back even further, okay? And let's just pull out the fib again, okay? So the levels that we're going to focus on right now, okay, are these main levels, okay, right here, okay? So what these all mean, okay, starting with the 38.2, okay, it is an indication of a strong trend, okay? The 38.2 is a strong trend, okay? Because if price right, or to do something like this and then reject, okay, you could say that you're in a very strong downtrend, okay? The retracement up was very, very shallow, okay? The deeper you get and pull back, the higher you go, okay? The higher you go, the higher, right, the likelihood of a reversal, right? Because you start inching back towards that full market retest of that high, and then if it gets there, right, it could break, okay, and go up. So the higher you go, the higher the likelihood of a reversal, okay? But the 38.2, okay, is a strong trend, okay? If price bounces here, right, and realize that, yes, these lines give you a good indication, but it's a zone, okay? This is a zone that we're looking for, right? Not just this line here that says 1588.798. Okay, we're looking at this as a price reversal zone, okay? If price bounces here, it means that the trend strength is right, very, very strong, okay? So strong trend. Now, if we're to come up here, okay, and let's say price comes and climbs up here to the 50. Okay, the 50, our text back out, is also a strong trend, but it means that there are equal buyers and sellers, okay, in the market. So it is a strong trend, equal buyers and sellers in the market. Okay, that is the 50% retrace. Okay, so the 61.8 now. This level, okay, this zone here, right? This zone up here. It is the golden ratio. Okay, it is a strong resistance, okay, but the trend strength, okay, is medium. Okay, and it is a strong resistance. It is known as the golden ratio, okay, but it is a very strong resistance, right? So you can a lot of the times expect rejections off of that level, but realize that the trend strength goes down to medium. And why is that, right? Because the 50 here puts you at equal buyers and sellers in the market. Okay, the 61.8 means that there's more buyers and sellers in the market. So remember, the deeper of that pullback, right, the less trend strength that you have. Okay, the higher the likelihood of a reversal. Okay, remember that. So trend strength, medium. Okay, now when you get up here to the 70.5, through the 78.6, okay, I kind of like to bunch these guys together, call them my last line of defense, okay, because the higher that you go up, remember, the higher the likelihood of a reversal. Okay, so I like to look at these guys, okay, and all of these guys really fall under the same category. Okay, it is a strong resistance level, okay, but you have a weaker trend, right? And it's a weaker trend, again, because you are pulling further in, okay, further back to that full market retest, okay? So these levels here, right, trend, weaker trend, strong resistance level, okay? And then up here at the 88.6, okay? The 88.6 is a weak resistance, weakest trend strength. Okay, so it is a weak resistance and a weaker trend strength, right? Once you start inching up here, you are very, very close to that full retest of that market high and more prone to a possible reversal. Okay, so that is a brief overview of every single one of these PRZ levels here. Okay, again, the 38.2, you have a strong trend, right? Remember, if price bounces off of this level, okay, this trend strength is very, very strong, okay? So, you have that, and realize, right, that price can go to any one of these levels. So you're not just jumping in, you are waiting for it to give you confirmation, okay? You're waiting for those candlestick patterns or those reversal patterns to form and actually give you confirmation that the market is changing direction, okay? Because it could continue all the way up, right? It could continue all the way up and actually change direction. So make sure you are not caught in the middle, okay? And always remember, the deeper the pullback, the higher the likelihood of a reversal. The deeper the pullback, the higher the likelihood of a reversal. Okay, so there is that. I'm just going to give everybody just a few more seconds if they haven't already. You can copy these down. Okay, 38.2, strong trend. The 50, strong trend. Equal buyers and sellers in the market. 61.8 is that golden ratio. It is a strong resistance. Trend strength, though, is medium. 70.5, 75.4, 78.6, strong resistance level, weaker trend. 88.6, weak resistance, weakest trend. Okay, so those are that. Now, looking at it at a real market perspective. Okay, if you were to look at this, right, and we'll look at a few different pairs. So here, right, we created kind of an inverse head and shoulders. So you start this new trend up, right? And as you can see, you've had pullbacks, Okay. Here is an example of actually being able to utilize this. Okay, so here, right, we're kind of in an uptrend here, right? Go to the next candle. Price came down. So maybe price has topped out. So, of course, you've got to wait. Okay, you're starting to see this retracement here. Okay, and let's just utilize this as an example. You will go swing, right, low to swing high for an uptrend, wick to wick. Okay, and this is on the 4-hour time frame. This is the time frame I like to utilize. Gives you a better sense of direction of the trend. Okay, and then it gives us, okay, a good inclination on where it could possibly reverse from, right? These key levels to possibly look at, okay? With the Fib retracements, right, we have a kill zone, okay? A lot of the times, you'll see price come in here, okay, or come up here, okay? So we have a kill zone and a secondary kill zone, right, that we can start to look at. Okay, and if you don't want to keep this fib on your chart, right, you can mark up these key levels, wait, see if price comes down to it, okay, wait for it to create kind of one of those reversal patterns, okay, maybe you want to monitor it from the hourly chart so you don't miss anything, okay, and then you just let it ride out, okay. Oh, look at that. Look at that. So, as you can see, if we were to fib that back out again, okay, price came down, okay, came down, wicked right into our kill zone, right, of that 50%, okay, came up, came back down, kind of created this double bottom, okay, shot forward. Now it's kind of like retracing into that neckline, right, or maybe you see a shoulder, a head, a shoulder, However, however you see it, but you could have gotten that good entry, okay? And how you would take profit with these levels, okay? So your entry, okay? I recommend everybody do this, right? You get your entry, whether it be in this zone or this zone, okay? Your take profit 1 will be that 23.6, okay? And that would have given you, you know, around 80 pips, you know, a little bit less, you know, 78 pips, okay? That would be your take profit 1, and then your take profit 2 would be the 0, okay? And that would give you, you know, 150 pips, okay? So that is how you would take profit. And as you can see, take profit 1 got hit. You're pulling back, okay? Creating still though, what? Higher lows. Okay, boom. And then you there, your take profit 2 would have been hit, okay? And if you didn't, right, get this entry, like I said, maybe because it went up, right, came back down, kind of created this head and shoulders pattern. Maybe you got back in here on the 38, right? TP1 still would have gotten hit. It would have only been for, you know, about 40, 50 pips, but boom, would have gotten hit, and then would have gotten hit here as well. And how you would set these up, right? Again, make sure that you're trading a 3-to-1. So if you would have entered, you know, like right around the 50, draw that out. That's a 2.45. You know, I would put stops below the 61.8 for a possible push down. If you enter in, you know, at the 61.8, you'll put the stops past the 78.6. Okay, if you enter in here, put the stop something like that. Okay. But that is how you would go ahead and kind of do your risk to rewards, right? Set it up and just ride it out. Okay. Manage your risk, right? We manage our risk. We put our lot sizes there for a reason. You know, make sure that you are leveraged properly and ride it to take profit. Okay. Don't make sure you're not closing your positions too terribly early. Okay. Something that you could do, right? Because again, this is take profit 1, right? Make sure that you move stops into profit when you hit this level. So, you know, what I would do personally, okay, is price came up, and like I said, that is from the 50, you know, a little less than 80 pips, right? Price came up, pushed above, retest, and then shot above. Once it rebroke that level, right, I would have taken most likely, you know, half of my position off here at about 80 pips, let the other half run to the take profit 2. So what I would do after it broke, retested, and rebroke, I would trail my stop loss, right, following this. So once this got hit, right, and it rebroke here, my stops would have most likely been right below these lows initially, okay, and then as it re-pushed back up and, you know, pushed up after the close of this candle here, right, I would have moved my stop there, right, as it pushed up, right, I would have moved my stop here, below there, right, so I'm making sure I'm getting my pips along the way if it were to randomly drop off, right, but it hit take profit 2, and as soon as it hits take profit 2, right, always be greedy with your profit, so take your position and go, okay? So that is just an example here with gold, okay? Let's look at a random one. Let's look at GBP, JPY. I like GBP pairs, so we will go ahead and look at GBP, JPY. So we're looking at that on the 4-hour. Like, let's look at one on the daily time frame, okay? So, I mean, just here, this is where we're looking at. This is where price is. I see a swing low to a swing high right here. So, or even actually as I was here, right? It's a little bit lower, swing high, and then you have that retracement. So let's see what this is here, okay? So wick, right, to wick. Okay. Boom. Okay. Wick to wick. And then if you want, right, you can draw up your kill zones. Okay. Monitor price action for possible reversals off of these levels. Okay, and again, let's go down to the 4 hour so you can see this. Okay, price comes down, goes right into that kill zone. Price will only go so far until it gets exhausted, right? Got exhausted, rejected, right? Because remember, creating what? Higher lows, right? Higher high, higher low, shooting for a higher high. Okay, so as you can see, could have gotten in again, right? Your position, and let's say that you're new to fibs, you're new to trading, so you're not getting these entries down here. You got in, you saw price break to 50, and you're gonna buy if price comes back above it, right? There's a way to do it. So when price goes and breaks below these levels, right? So it broke below the 50 here. And let's say we didn't know it was going to go down to 61.8, right? But how you could do this is if it did go down below the 61.8, right? Because you're going to have multiple touches of each level. So, I mean, it rejected here off of the 50, multiple touches. There's a touch of the 50, there's a touch, 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 there's a touch. Multiple different 4-hour opportunities to have gotten in on this trade, right? So you'll have multiple opportunities. So if it breaks below, I could be like, okay, if it goes down here, I'm going to wait until it exhausts itself out, and then I'll look to buy. But if it breaks like the 61.8, comes back in, breaks, comes back in, or breaks below, I can set a buy limit on the 61.8, right? So even if it comes down here and I miss it, price, I can expect it to go to these levels, right? So I can set a limit for when it comes back. So when you saw this break, kind of retest, not go down again, but come back up and re-break up here, maybe you set a limit on this 50% here, okay? And then you would have a position, and it would look something like this here, okay? And again, you would have your stops below that 61.8 level, okay? Boom, take profit. And as you can see, okay, you would have, gone a few pips in drawdown right here, less than, 40 pips drawdown, and then you would have gone up. Right, TP1, you would have gotten, 240 pips, and then TP2, you would have gotten 450 pips. Okay, and it's very simple again, right? You're just looking for those retracements, okay? And this Fibonacci tool can help with that, right? And you can utilize this on anything, right? Multiple different, every pair. I showed you it on gold. I showed you it on a currency pair. I mean, you could use it on, cryptocurrencies as well. Okay, so here, right, knowing that raw market movement, right? You have a swing low, a swing high, and you start to have that retracement there. Okay. Boom, shot up. Okay. You can utilize this for a lot of different things, right? And you can utilize this on pretty much every time frame as well. Okay, so I was seeing something on your USD here. I may be able to show it. Okay, so you have a swing, Okay. And as you can see, right about now, it is at that 78.6. So we'll see what happens. Okay. But you can utilize these Fibonacci's on every time frame, right? The higher the time frame that you go up, you should know by now, the bigger the moves are going to be, because you see a bigger outlook, right? On the weekly, we can see price from 1.02 all the way up to 1.25. If I'm going down to, the 4-hour time frame, I can't see that far. I see 0.7 to 1.12. Okay. So you don't really see as big of a picture the further time frame that you go down, but you can still utilize these retracements, right, just the same way. So here is like another instance right here, right? You could have fibbed high to low. Okay. And boom, right? Waited for that rejection, and it's right in that kill zone again. Take profit, take profit. Okay. And as you can see, I mean, it even continued further,